Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries on the very program. Now, in case you're here for the first time, the WhatsApp number is flashing on your screens. This is where you send me all the queries that you have regarding the stocks in your portfolio. Don't forget to mention your own name, location and your contact details, as we can give you an opportunity to speak live to our top market experts and get a custom-made advice for yourself as well. Now, what we can also do is take some questions on our YouTube. In case you're watching our show live on our channel YouTube Business Today, then go on to Daily Calls Live and then use the comment section there to send me your questions. I'll be happy to pick up some of those questions to address it with our top guests. In fact, let me quickly now look at some of the viewers who are joining in early on our YouTube channel. We have Anuj Singh, Shubham Malik, Aarti Jain joining in early. Welcome to all of you. We have also a lot of our viewers who are joining in on our WhatsApp with their questions. So welcome to everybody. Let me also welcome our guest now, Mr. Nilesh Jain, a favorite on Daily Calls show, is actually joining in on the show with us to share with us his views as far as the markets are concerned. He's from Centrum Broking, as all of you know, tracks and heads the technicals and derivatives coverage there. Nilesh, welcome to you. Good to have you with us as always. First up, a quick look at the markets and help us understand. We are again seeing some pressure develop. We were at 26,120 odd in the morning, and then we have come off from that peak a little bit. So is the selling pressure at higher levels still sustaining?
Very good afternoon, Sakshi. Absolutely. So if you see Nifty, Bank Nifty, the benchmark indices, which are although trading in a positive territory, about 26,000 for the Nifty, and Bank Nifty is comfortably trading above 59,000. But you need to see the broader markets where the major pain can be seen in both Nifty, mid cap and small cap. Specifically, Nifty small cap index is underperforming. So looking at the overall setup, looks like we may see a follow-up move to continue on the lower side as far as Nifty small cap index is concerned. The overall structure is looking slightly on a negative side. Now, coming to the Nifty index, we may see some bit of consolidation since tomorrow we have a monthly FN expiry for the Nifty index. So quite possible that we may see another tick on the upside on the back of short covering in the Nifty. So the range from tomorrow's expiry point of view looks like 26,000, 26,200, and Bank Nifty also looks strong on the chart. Given the kind of setup we are witnessing in the index heavyweight counters like HDFC, ICICI, Axis Bank, specifically this particular stock is looking strong on the chart. So we can expect a move towards 59,500, 59,600 in the Bank Nifty. Overall, it's kind of a stock specific market, but it's better to avoid taking any contraband in the small cap index, benchmark indices. In fact, large cap stocks are looking comfortably better placed.
Okay, fair point. Let's actually start taking some questions, Nilesh, and then we will come to your top choice of stocks also in the show. We'll take the first question from Anuj Singh, and this one is on Vedanta. Anuj says, good afternoon to all of you. Good afternoon to you as well, Anuj. He says, Vedanta का share 266 पर लिया हुआ है, 500 shares है, इसमें 88% तक का profit भी हो रहा है. अब मुझे क्या करना चाहिए? तो सबसे पहले तो आपको बधाई, Anuj, that you are sitting on good amount of profits on Vedanta. And this, of course, has been a company that's in limelight because of the ahead coming in demergers, and that's the key big trigger that everybody is clearly watching out for. But you're sitting on a good amount of profit, and it's always good to take a view as to what should you be doing with your profits at this stage. 88%, nearly 100% kind of a profit. What would you say, Nilesh?
Well, Sakshi, first of all, congratulations for holding good stock in the portfolio where you're getting close to 100% kind of return. Now, I assume that he must be holding it for a longer term time frame, given the kind of a structure that we are witnessing in Vedanta. The structure looks strong, and we can expect a further uptick to continue gradually towards 530 and 550 on the upside. So, look strong. Stay put will be the advice in this particular counter. But here I would advise to keep a stick stop loss at 478. So 478 was the major breakout level that should act as a crucial support now, and keep a stop loss near about those levels and ride this momentum up to 550, 580. Gradually we expect this counter to move on the upside, and overall we are bullish on the metal space as a whole. So given the kind of setup we are witnessing in Nifty metal space, I think this rally is likely to continue.
Okay, let's take the next question now. This one is from Shubham Malik. He says, hi Sakshi, good afternoon. Good afternoon to you as well. Shubham says, I'm from Bangalore. I want to know about PGEL at the current levels also, if this can be advised to invest in at the current levels for the long term, that is. Okay, we'll definitely look at PG Electroplast. 580 is the current level. Almost 2% of a downtick is what we have seen on this one. Although in the last 1 month, there has been some recovery, because in the last previous month we had seen a lot of volatility on the stock and a sharp downturn as well. In fact, in the month of post August we had seen some sharp fall on this one. Let's find out on PG Electroplast. Would you advise a current price buy?
Absolutely right, Sakshi. So we have seen a big crack in the month of August. All the way the counter corrected from the levels of 750 to 500. Now, given this kind of structure, and even if you see this calendar year, the stock has underperformed the most. It has continued the formation of a lower top and low bottom. So looking at this kind of structure, there could be possibility of some bit of a time-wise correction to continue. If somebody is looking to make an investment from a longer term perspective, then I would advise to buy in multiple tranches. One portion can be bought in this range of 560, 580, but there is still some more room left on the lower side. So 520 will be the next important support to watch out for. That could be the next entry point. So given a time frame of more than 1 year, one can look for an investment. But purely from a trading perspective, it's an avoid, because the structure from a short-term perspective is not looking that promising.
Okay, fair point. Let's take the next one then. Nilesh Jain has asked us the next question. She says, I am holding BHEL shares in my portfolio. I have about 790 shares priced at 291. I can hold it till the upcoming budget. Would it be advisable?
Looks like there could be possibility of a gradual up move from here, because the stock recently gave a breakout. Then we are witnessing profit booking now, and on the lower side, it has a very good support of its 21-day moving average that is placed at 270. So keeping a stop loss below 270, one can stay invested in this particular counter, given the kind of time frame of 2 to 3 months. I think there is high possibility of further upside towards 300 plus can be seen in the near term. So overall structure looks positive, but if at all you see any correction in the market, and that definitely will affect this counter as well. But overall positional structure looks strong.
Okay, let's take the next question then. A lot of our viewers are actually joining in on our WhatsApp as well and asking a lot of questions there. So we'll pick up some of those questions too. This one is from Meetika. Meetika says, I have bought Coal India shares in my portfolio at 419. Could I please get a suggestion of where can I shift out from the current position to, because the stock is not doing much. Coal India, yes, you're right. For some time it has been consolidating quite a bit. In fact, last year in 2024, the stock had shot up substantially. And after that, this year, the stock has practically done nothing. 374 is the current price. It's also come down from your own purchase level of almost 420. So you are facing some losses there as well. Nilesh, what will be the suggestion?
Actually, last 1 year has not been so good for this particular counter. We have already seen a gradual decline. With that decline, the counter has also corrected 1 year of time-wise correction as well as price-wise correction, but there are no signs of reversal yet. So it's kind of a sell-on-rise structure as of now, till the time it doesn't take out 390, 400 levels on the upside. If at all you get any pullback towards 380, 390, use that pullback to exit. If bought it from a short to medium term perspective, because the structure is not looking that good. On the lower side, if at all it breaks 370, then it may slide further towards 360 and 350. So overall, I would suggest to exit on pullback.
Okay. Let's take the next one. This one is from Satya. He says, hi Sakshi, good afternoon. Good afternoon to you as well, Satya. He says, I want to know whether I can enter Kajaria Ceramics from my current position in KEC International. Well, Satya, you haven't mentioned whether you're in profits, whether you want to switch for better prospects, or this is a place where you're feeling stuck at currently. But let's try and overall understand what are the chart patterns suggesting to us on both KEC International and Kajaria. Maybe that will help you take the decision. How would you explain that, Nilesh? We don't know the details of the current position at KEC International, but looking at the charts, what would you say between KEC as well as Kajaria Ceramics, completely from different sectors? What would you advise?
Absolutely, Sakshi. So both are from different sector, and both the stock has a kind of a bearish trend. So it's
Okay.
very difficult to comment whether it's advisable to switch to Kajaria from KEC. But yes, let's look at KEC chart first. The stock has given a breakdown recently. There was a big gap down opening in the previous week. So structure is looking weak for the KEC. So it is advisable to exit from KEC on pullback. Because the counter is slightly in the oversold territory, there could be possibility of some bit of rebound and use that pullback to exit from the long position. The short to medium term structure looks negative. Now, talking about Kajaria Ceramic, it has a similar structure where it has given a breakdown recently from its all short term moving averages. The only support I can see on the chart is at 1040, that's the long term 200-day moving average. So if it manages to defend the same, then there could be possibility of a rebound. But if it breaks below the same, then it may slide further towards 960 and 900 as well. So again, not looking that promising. Kajaria Ceramic as well. So better to wait and watch for some time being if you want to invest in Kajaria specifically. Otherwise, it's an avoid.
Okay. Let's take the next question. This one is from Teja. He says, I want to know, can I invest 2 lakh rupees in Laurus Labs for the next 6 months? Kindly suggest the same. Okay, so he wants to invest a lump sum amount of money. 2 lakh rupees in Laurus Labs. His time horizon is 6 months. Would it be warranted, or should he split his money in some other stocks?
If total investment is being done in one particular counter, then definitely I will advise to split it out in other sectors as well. But if he's already having exposure to other sector, and specifically in this counter, if we want to invest 2 lakh rupees, then my advice would be to buy in 2 tranches. One tranche, yes, can be bought at current level because already the stock has given a good momentum. It is trading well above its all long-term, short-term moving averages. Recently, we have seen a new record as well. So the momentum looks strong, but there are high possibility that stock may witness some bit of profit taking. So you should have some money left in your hand. If at all you get a dip towards 900 or 850, that can be used to buy the second tranche as well. Positional target in this particular counter comes somewhere around 1100 to 1300. That's 6 to 8 month kind of time frame. And the major structure, yes, that looks positive. But at present, the risk and reward is not looking that favorable. So that's why we are advising to buy in multiple tranches. You might get the lower levels as well for the second entry.
Okay, let's take the next question. This one is from Ramesh Babu from Andhra Pradesh. He says, 1000 shares is what I have of CG Power. I bought this at 780. Could you please guide me both on the short term as well as on the long term? What can I expect on CG Power's performance going forward? So 780 he purchased. Currently the stock is at 692. It slipped below his purchase price. What can he expect?
First of all, from a very short-term perspective, the structure is looking on a weaker side. It may slide towards 675 to 670. That's the immediate support of long-term 200-day moving average. But just in case if it breaks below the same, then it may slide further towards 620 or 600 as well. So first, keep a stop loss at 670 if bought it purely from a trading perspective. And from a positional perspective, I believe if somebody wants to stay invested for more than a year, then it's a good bet, but you should average as well on the lower side. To advise from a short-term perspective is looking weak, but yes, from a positional perspective of 1 year plus time frame, one can stay invested, keeping a stop loss below 620, and you might get a pullback towards 750 in the near term. And positionally, 1 year plus kind of time frame, I think the stock has the potential to move beyond 800 as well.
Okay, got that. Let's take the next question then, and this one is from one of our viewers again on our YouTube. We have Muthailu James asking, saying, I'm from Hyderabad. I want to take a fresh entry in Mazagon Dock shares. Could you advise at what level should I be looking at this one? Again, the shipbuilder space, the defense space is also coming back into limelight of late. A lot of defense related orders are being talked about. A lot of reforms are being done. Any suggestion on Mazagon Dock at the current levels, or do you think the stock is still going to be sideways for some time?
The stock recently witnessed some bit of pullback. That pullback got sold out, and it is facing stiff resistance of its 100-day moving average, which is currently placed at 2850. So first of all, I would advise to wait for the breakout if somebody wants to buy from a trading perspective. And from an investment perspective, I think one can go long keeping a time frame of 1 year plus in this counter. The immediate support is at 2600, so ideal buying range could be somewhere around 2600 to 2650. That can be a good entry point. Keeping a stop loss below 2400 for a time frame of 8 months plus, I think 3000 plus kind of levels can be seen. But yes, for purely from a short term trading perspective, I think it's not advisable to buy now because the structure from a short term perspective looks weak.
Okay, let's take the next question. This one is from Nitin. He says, can I get a view on Canara Bank? How would you look at this stock? Again, PSU banks have been coming back into flavor from last couple of weeks. Any suggestion on Can Bank?
Absolutely. So PSU banks have been in focus. In fact, since a long time, it has been forming a high and pattern formation. So we continue to remain bullish on the index as a whole. So PSU banking index is looking positive. Canara Bank, specifically this counter, the upside seems to be open up for 160, 170 in the near term. We can see those levels. Keep a stop loss below 139, and it's a buy at current level and on declines as well. Yes, it's a good portfolio stock as well. Apart from that, BOB, SBI, Bank India continues to remain our other preferred bet within the PSU banking space.
Okay, got that. Let's take the next question, and this one is from one of our viewers, Mr. Reddy. He says, hi Sakshi, can you please tell me any buying level in Sansera Engineering? Alright, let me pull up the stock here for all our viewers to also look at the share. Currently, the stock is hovering at 1% higher at 1625. Last 1 month, the stock has in fact had a good run up, 11-12% odd. Last 6 months, it's moved up 28%. So it's in a positive trend, at least in the last 6 months as we can spot. Nilesh ji, what would you advise on Sansera?
Well, a very good stock. Looking at the setup, it is forming a good rounding bottom formation. A gradual up move is something that we are witnessing currently. It is also trading well above its long-term and short-term moving averages. So structure-wise, looks like it is heading towards 1700, 1750 on the upside, keeping a stop loss below 1550. It can be added at current level and can also be added on declines as well. But positional target comes somewhere around 1700 plus. So keep a time frame of 2 to 3 months plus, then yes, it's a buy on decline kind of structure.
Okay, fair point. Let me also take another view. This one is from one of our viewers. This is okay, Harsha says, Namaste Nilesh sir, can I do a fresh entry in Sterlite Technologies at current levels, or should I wait for still lower prices? I want to also know about what range will it be playing in the near term.
See, first of all, the immediate structure for this stock is looking weak. The counter has given short-term breakdown as well today. So do not be in a hurry to buy this particular stock as of now, because we may see further lower levels of 100 to 98 as well. So we may see some bit of a mean reversion happening in this particular counter. 200-day long-term moving average, which is also placed at 95. So buy somewhere near the support. If at all you get any dip in the range of 98 to 100, that can be a good entry point. It has a next support level at 90, that should be the stop loss. And the range, the broader range, I believe could be somewhere around 85 to 120. So that can be a broader range. We may see this particular counter oscillating for next 3 to 4 months.
Okay. We have this question coming in from one of our viewers. Okay, we have this question from Namish. He says, I'm a big fan of Business Today Daily Calls show, and I'm a daily viewer of this show. Thank you so much, Namish, for writing in. The question he has is on two stocks, Nilesh. One is Flair Writing, and the stock at the price at which he bought this stock is 300 rupees. The other one is National Fertilizers, NFL, where he took an entry at 97. He wants to know whether he should continue to hold on to what he has, or should he enter again and average out his position.
Well, first of all, looks like a recent purchase in Flair Writing. I would suggest to stay invested with your existing long position. Do not average for the time being, given the kind of selling pressure we are witnessing in broader markets. That's quite likely that these stocks will also witness a similar correction. So as of now, Flair Writing has a next support at 280. Keep a stop loss at 280. Stay invested. If at all you get any pullback towards 310, 320, use that pullback to book your profit and exit from the long position, because the major structure is not looking that promising. Coming to NFL, it has a weak set of structure as of now. It has given a breakdown below 90 level. So 90 was a very strong support, which will now act as immediate resistance. On the lower side, it may slide further towards 82 to 78 on the lower side. So again, a sell and rise kind of structure. If bought it from a short-term perspective, if bought it purely from a longer-term perspective, then yes, NFL and Flair, both the stocks one can hold. For NFL, the stop loss comes somewhere around 84.
Okay, let's take the next one then. This one is from one of our viewers. Ankur, he says, Sakshi, which one looks better to invest in the retail space? Vishal Mega Mart, Trent, D-Mart. Which one would you advise at the current level? So, okay, Ankur, I'm guessing that this is for your long-term investment that you're looking at. Let me try and find out where the trends look more positive. Vishal Mega Mart, Trent or D-Mart. Well, these retail stocks have in fact had a slow moving zone. They've been in that kind of a zone in the last 6 months to 1 year odd. Any suggestion?
Well, all the three stocks are in fact in a downtrend and looks weak from a short to medium term perspective. VMM, DMart, in fact, both the stocks are looking slightly on a weaker side. As far as VMM is concerned, it's an avoid because looks like it is heading towards 125 to 120 on the lower side. Coming to the DMart, yes, this particular counter has already witnessed a long time-wise correction all the way. If you see, since 2021, the stock is oscillating in the range of 3,000 to 5,500, and looks like this time-wise correction might over if at all it breaks 4,500 on the upside. So this particular counter one can look for and can be added on declines as well, keeping a stop loss below 3,500 because it is trading somewhere near the support level. So from a risk and reward perspective also looks positive, but purely from a longer term play, from a short to medium term perspective, all these three stocks are looking on a weaker side.
Okay. Let's take the next one. This one is from one of our viewers again on our YouTube that we have, Roshan Pradhan. He says, any suggestion for the long term I can enter into IGI? So he's talking about that gemological institution share that got recently listed. It won't have a too long history for you at this point in time, Nilesh. International Gemological Institute of India, 321 currently. Any suggestion?
Sakshi, the stock post-listing has witnessed a sharp decline. There was a bit of a pullback, but that pullback was unsustainable, and again we have seen selling pressure at the high level. So, not looking that promising. I won't advise taking any contract at current level. I would rather wait for a breakout above 370. That will give me more confidence to buy this counter. But as of now, it's an avoid. If at all somebody wants to take a long position, then keep a strict stop loss at 295. And a pullback may be seen towards 350, but a breakout over 370 will give more confirmation.
Okay. Let's take the next one. This one is again from one of our viewers, Mr. Lalit. He says, I want an overview on JM Financial for the next 3 years. What would you advise here?
See, from a next 2 to 3 year perspective, it's a very good bet and can be added in the portfolio in a staggered manner, because as of now, as we have been talking about the pain in the mid cap and small cap space, so this particular stock will also witness a similar selling pressure. So ideal buying range could be somewhere around 120, 130, but I would advise to buy in multiple tranches. From a positional perspective, it has a potential to move towards 200 plus as well. So that's a 2 year plus kind of time frame, and keep a stop loss below 110.
Okay, let's take this next question. This one is from one of our viewers. This is the last one that we will take from you, Nilesh. Then we'll jump on to your top choice of stocks. Okay, this one is from one of our viewers in Gurugram. Kalika Dham says, I've bought DCM Shriram Industries at 110. It's at 171. So I want to know, should I hold on for next 1 week also? The stock is in uptrend. Today also 4% higher, the day's high level. Is another weak trend positive so that one can look at making some more profits?
Right. So today, in fact, we have seen some bit of rebound as well as a breakout from a short-term consolidation. It has a very good support at 162. So first of all, I would advise to keep a strict stop loss at 162, and it has a potential to move towards 180 from a very short term perspective, and a breakout above 180 will give another level of confirmation. Then probably we may see the levels of 190 to 200 as well. So very good bet purely from a trading perspective, and one should keep a stop loss at 162. That's immediate support for this particular counter.
Okay, fair point. All right, Nilesh, let's try and understand from you your top choice of stocks then before we let you go.
Right, Sakshi. So the focus has been shifted towards the IT packs, and Nifty IT index seems to have formed a bottom formation, and we are witnessing a strong rebound and a momentum as well. So overall, we remain bullish on mid cap and small cap ITs. Emphasis is particular counter is looking positive. Emphasis, which is currently trading at 2800 plus, it has found a very good support at 2620, and looks like it is heading towards 2920 to 3000 levels on the upside. So one can buy Emphasis, keeping a stop loss below 2770, and upside can be seen somewhere around 2900 to 2950 from a short term perspective. Another stock that is looking positive is Card Trade. We have seen a very strong momentum in this particular counter over past few months. Recently, we have seen some bit of decline. It has a very strong support at 2980, 2980 should be the stop loss. One should wait for some bit of dip towards 3100 to 2990. That can be a good entry point. And on the upside, 30 to 50, 3300 kind of levels can be seen in the near term.
Okay, got that. Let's take the next question. Okay, thank you so much then, Nilesh. We'll thank you then for being with us on the show and of course helping out all our viewers address their queries as well. Always a pleasure to host you with us. Viewers, we'll jump on to the next question.